Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about the continuing collapse of the Russian ruble. The generally accepted principle in economics is that when your economy is doing well, then your currency tends to strengthen because there's usually a lot of demand. People want to buy your currency in order to buy products from your country. And the reverse is also true. If your economy is doing badly, then generally speaking, the rest of the world doesn't want to buy your currency. There isn't a strong demand, and so the value of your currency will fall. And over the course of the last 12 months, we have seen a significant fall in the value of the Russian ruble. So in today's video, we'll have a look at what's going on with Russian exports. We'll dive into the details on how much revenue Russia is earning from all of its fossil fuel exports, because the Russian economy is fundamentally linked to the sale of oil, gas and coal. We'll look at the breakdown of which countries are now Russia's strongest trading partners, because obviously there's then a link to the currency exchange rate with those countries. We'll have a look at the current price of Russian oil and how it compares to the general market. We'll then have a detailed look at what's been happening to the exchange rate between the Russian ruble and the US dollar, the euro, the Chinese yuan and the Indian rupee. And then finally today I'll wrap up with my summary as to what I think is happening with the Russian ruble and what the implications of this are for the Russian economy. This chart shows the total value in millions of euros of Russian fossil fuel exports dating back to the start of January 2022. The scale on the left-hand side of this chart is measured in millions of euros per day and goes from 0 at the bottom to 1.3 billion at the top. The bottom axis of this chart is a timeline from the 1st of January 2022 through to the end of June 2023, and there are three vertical dotted lines on this chart. The first is the 24th of February 2022, which was the day that Russia started its invasion of Ukraine. The second is the 5th of December 2022, which is when the European Union brought in an outright ban on the purchase of all Russian crude oil transported over the sea. And the third is the 5th of February 2023, when the European Union brought in its ban on all refined products such as gasoline and diesel. And if we look at the colour coding on this chart, which you can see is labelled on the right-hand side, the blue section at the bottom represents the daily value of coal sales. The purple section above it represents the value of crude oil sales. The beige or light brown section above that represents liquefied natural gas sales. There is a very thin, almost invisible blue line representing liquefied petroleum gas sales. The lilac section represents refined oil products, and the orange or light brown section at the top is pipeline gas. So we start off by looking at the situation in January 2022, which was before the war started. You can see that the revenue that Russia was earning was around 775 million euros per day from all of its fossil fuel exports. The biggest single source of revenue was crude oil sales, representing around 300 million euros a day, or around 40% of total revenue, followed closely by pipeline gas, which was generating around 275 million euros per day, or around 35% of total revenue. And the third biggest earner for Russia was the sale of refined oil products such as gasoline and diesel. If we now take a step back and look at what happened after Russia's invasion of Ukraine, you can see in the initial couple of months after the war started, Russia's revenues increased significantly, and in April 2022, total revenue peaked at around 1.2 billion euros per day. And the reason that we saw this large spike was that prices in the international markets were driven up by the uncertainty of the war. For a short period in April, Russia was actually earning more from the sale of pipeline gas than it was from crude oil, as a result of the fact that the price of pipeline gas in Europe rose so dramatically. And as we've discussed many times on the channel before, a lot of countries at that point were totally dependent on pipeline gas coming from Russia. Germany and Italy had built electricity power stations that were fed by this natural gas. And for a short period, the whole of Europe had no choice but to continue buying that gas at elevated prices, which resulted in a huge influx of cash for Russia. However, as you can see, after the peak in April 2022, there has been a consistent reduction in the total amount of revenue that Russia is earning from all of its fossil fuel sales, but particularly from pipeline gas. If you look at the section right at the top of this chart, it narrows down significantly, and where we are right now is Russia is earning a very small amount from its pipeline gas sales. And this is a major issue for Russia because the easiest way to transport natural gas when it's extracted from the ground is to put it into a pipeline and feed it directly to all of your customers. But in order to be able to do that, you obviously need to build the pipeline. And over the course of the last 30 years, Russia has built a significant network of pipelines all across Europe. Unfortunately, from Russia's point of view, most of those customers have now come out and stated that they no longer want to buy any of that gas. And if you've been following the channel, you'll be perfectly aware that two of the biggest pipelines that Russia constructed, Nord Stream 1 and Nord Stream 2, which go under the Baltic Sea, were both hit by underwater explosions late in 2022, and those pipelines have been severely damaged and are no longer operational. So Russia has lost the vast majority of its European customers, and the biggest problem that it's facing is that it's not easy to be able to divert that gas to other markets. Because if it wants to sell gas to India and China, either it needs to construct new pipelines, which requires firstly a huge amount of investment, and secondly a large amount of time to actually complete these pipelines. So that really isn't a feasible solution for Russia because it doesn't have a lot of cash right now and it doesn't have the time to be able to construct those pipelines. So the only alternative option would be to convert this gas into liquefied natural gas and transport it on ships. However, the problem from Russia's point of view is that it simply doesn't have the capacity to be able to process that amount of gas and convert it into LNG. So the situation as it sits right now is that Russia is sitting on one of the largest reserves of natural gas under the ground, but it doesn't have any way of monetizing that gas because it's lost its customers and it can't transport it to any new markets. Now, before we go on to talk about Russia's oil revenues, I want to talk to you about today's sponsor, Masterworks, and the implications of Russia's invasion of Ukraine on both the global economy and global returns. The global economy once again appears to be heading towards a slowdown, and Germany, which is the fourth largest economy in the world, is currently in recession. And when the economy starts to slow down, it puts pressure on things like the S&P 500, where just 7 tech companies are currently producing nearly all of the gains. And as a result of the downturn in global returns, EY recently reported that the ultra-wealthy are changing strategies and allocating more to alternative investments. And in fact, the market for one alternative, art, has actually passed its pre-pandemic high. And the art market is an investment that you can access in minutes without needing millions, thanks to Masterworks. So far, Masterworks has sold $45 million worth of art, and every Masterworks exit to date has returned a profit, with 3 recent returns of 10%, 13% and 35%. So in view of these characteristics, it's no wonder that Masterworks has seen over 700,000 members trying to gain access, and there is now a wait list. Now, I want to make it very clear that I'm not providing investment advice, and before you make any investment, you need to do your own research. However, if you are interested in investing in Masterworks, then Joe Blogs viewers have exclusive VIP access to their latest offerings, which you can check out by clicking the link in the description below. If we now have a look at what's been happening with crude oil, you can see that during the first half of 2022, the revenue that Russia was earning from crude oil sales actually increased as a result of the elevated prices of crude oil in the international markets. However, since the middle of 2022, we have seen a continued decline in total revenues. And as it sits today, Russia is earning around 300 million euros per day from its crude oil sales, which is very similar to the position in January 2022. However, the price of oil has fallen significantly over that period. So what that means is that Russia is selling larger volumes of oil at a lower price to achieve the same amount of revenue. And therefore the profit that Russia is making is significantly lower. And if we look at the situation for refined oil products, so this is crude oil that's been passed through the Russian refineries and converted into end-use products such as gasoline, diesel and kerosene, you can see that in January 2022, Russia was earning around 150 million euros per day from the sale of those products. In the first 6 months of 2022, those revenues increased to more than 200 million euros per day as the price of refined products rose. However, since the middle of 2022, Russia's revenues have started to decline and are now coming in at around 100 million euros per day, which represents a significant fall compared to where Russia was prior to the war starting. But as with crude oil products, the bigger issue from Russia's perspective is that the price of refined oils in the international markets has fallen. So Russia is now having to sell larger volumes of its refined products for a lower total revenue, and that means that its profit margins have fallen significantly. So the overall summary of this chart is that prior to the war starting, Russia was earning around 775 million euros per day. Immediately following the war starting, that revenue rose to around 1.2 billion. However, today total revenue is down to around 450 million euros per day, representing a fall of around 325 million euros every single day, or around 42%. And that is one of the major reasons why the Russian economy is in such dire straits at the moment, and why Russia is continuing to record huge deficits. As we're looking at the exchange rate for a variety of different countries against the Russian ruble, I thought it was important to have a look at which countries are now doing the most trade with Russia. And this chart shows the top 5 importers of Russian fossil fuels during the week ending 25th of June 2023. The scale on the left-hand side of this chart is measured in millions of euros, and across the bottom we've got 5 different countries. In terms of the colour coding, the black section represents pipeline gas sales, the green section refined oil products, the dark green section liquefied natural gas, the light blue section crude oil transported over the sea, the medium blue section crude oil transported by pipelines, and the dark blue section coal. And what this chart shows is that Russia's largest trading partner is now India, who purchased around 900 million euros of Russian fossil fuels during that week. And the vast majority of those purchases were crude oil transported by ship. That represented around 800 million euros. However, India also purchased around 75 million euros worth of coal and around 50 million euros of refined oil products. China was Russia's second largest trading partner, purchasing around 800 million euros of Russian fossil fuels. The largest single purchase was crude oil transported by ships, which represented around 350 million euros, followed by pipeline purchases, which represented around 250 million euros, coal, which represented around 100 million euros, pipeline gas, and then a very, very small amount of refined products. Russia's third largest customer for fossil fuel exports was Turkey, which purchased around 450 million euros worth of goods. And interestingly, the largest single purchase was refined oil products. And as we've discussed previously on the channel, India and China predominantly are not interested in buying refined products from Russia because they have their own refinery networks, and they would rather buy crude oil and pass it through their own system and therefore keep some profit for themselves, rather than buying the more expensive and higher margin refined products. However, as you'll also be aware if you follow the channel, Turkey is in dire straits at the moment in terms of its foreign currency reserves, and so it needs to find friendly trading partners. And as Russia has lost its main markets for refined oil products, which were being sold into Europe, it's now turned to Turkey and is supplying large quantities. And one of the big questions here is whether or not Russia is actually being paid in cash for those sales, or if Turkey is just building up more debt. And I think that second scenario is highly likely. And as you can see, Turkey is also buying seaborne crude oil from Russia, as well as pipeline gas and coal. Now, interestingly, Russia's fourth largest trading partner is the European Union, which purchased around 175 million euros worth of fossil fuels. And this really is the legacy of the relationship. Some of the countries in the European Union have been given a dispensation because they're struggling to be able to find alternative supplies. And as you can see from the breakdown, the largest single purchase is crude oil that's being provided by pipelines. And these sales relate to some of the landlocked countries in Europe that don't have coastlines, so they're finding it difficult to replace oil that's being provided directly from Russia via the pipelines with oil that's being transported overseas from other countries because they simply don't have the coastline or the infrastructure to be able to take those deliveries. And the other two categories of products that European countries are continuing to buy from Russia are liquefied natural gas, as there's no actual outright ban in place at the moment, and refined oil products for exactly the same reason as crude oil. Some of the countries are struggling to be able to find alternative supplies. And Russia's fifth largest trading partner for fossil fuels is South Korea, and the biggest single purchase that South Korea is making is coal. So as I said at the start of this section, the reason that I wanted to highlight this is that India and China have now become the two biggest trading partners from Russia's perspective, and therefore we need to have a look at what's happening with the exchange rate between the Indian rupee and the Chinese yuan. This chart shows the movement in the price of Russian crude oil, referred to as Urals crude, over the course of the last 12 months. And what this shows is that this time last year, a barrel of Russian crude oil was trading for around $81. However, over the course of the last 12 months, we've seen a significant fall in that value. And today, a barrel of Russian crude oil is trading for less than $59. And if we look at the profile of this chart, you can see that between July and November 2022, the price of Russian crude was coming down, in line with what was happening in the international market for general oil prices. However, in December, we saw a sharp fall in Russian oil prices, and that was as a direct result of the European Union bringing in a ban on the purchase of all Russian oil transported over the sea. That significantly reduced the market for Russian oil, and as Europe is the closest market and therefore the most convenient and cost-effective from Russia, it had to reduce its prices in the international markets to encourage countries like India and China to take larger volumes. And as we just discussed when we were looking at Russia's total revenue, the problem from Russia's point of view is that as the price falls, it needs to sell larger volumes just to stay at the same total amount of revenue. And so Russia is reducing its profit margin on all of its oil. And ultimately, that's what's hurting the Russian economy, because it still may be shifting the same amount of oil, but if the total revenue and the profit is falling, that means that Russia has less cash to invest into the economy, to invest into things like the war in Ukraine. And that's why it's recording large deficits and why it's having to dip into its reserves. And this chart compares the price of Russian crude oil against Brent crude oil, which is the international benchmark for oil prices, over the course of the last 3 years. And the reason that I wanted to show this chart is to highlight the discount that's been applied to Russian crude oil after the war in Ukraine. If we look at the chart prior to 2022, you can see that there is virtually no difference in the price of Brent crude oil and Urals crude oil. The two lines are moving together. However, from February 2022 onwards, there is a distinct split. And the price of Russian crude oil over the course of the last 18 months has been trading at a discount of around $20 per barrel. And the reason that I wanted to highlight this is that that represents a fundamental change in the profitability of the Russian oil market. The cost of producing that oil is exactly the same as it always was. However, as the value has fallen, that means that Russia is now making significantly less profit. And when you've got a product such as oil, which has very high fixed costs, a movement in the sales price hits your bottom line directly. This chart shows the movement in the value of the US dollar against the Russian ruble over the course of the last 12 months. And as you can see, 12 months ago, one US dollar was trading for around 60 Russian rubles. However, over the course of the last 12 months, we have seen a consistent and steady decline in the value of the ruble. And today, one US dollar is trading for more than 89 Russian rubles, which represents a fall in value of the ruble of more than 48% over the last year. Now, as we've seen from the data in today's video, Russia is not doing a significant amount of trade with the USA. So that might get you thinking that the exchange rate between the Russian ruble and the US dollar is irrelevant because Russia doesn't care. However, the problem that Russia has is that the international markets for oil and gas and coal and liquefied natural gas and fossil fuels in general is set in US dollars. That is the benchmark currency when a lot of countries are doing deals. So that makes the relationship between the US dollar and the Russian ruble important to Russia because these are its main products. And if those markets are being benchmarked in dollars, then a fall in the value of the ruble is going to cause problems from Russia's point of view. And the other problem that Russia's experiencing is that in terms of imports, the majority of markets are also benchmarked in dollars. So when Russia is importing goods, that means that the price of those goods is rising significantly for all of the Russian consumers. So that means that the fall in the value of the ruble should be driving up inflation in Russia. However, as you may well have seen from the other videos I'd posted, that isn't being recorded officially right now. Russia actually has one of the lowest rates of inflation out of all of the developed economies. And that really is a bit of a head scratcher. Nobody's quite sure what's going on, how Russia is managing to achieve that. Because as the ruble falls in value, prices should certainly be going up, and that should be driving up inflation, but that doesn't seem to be happening in Russia right now. This chart shows the movement in the value of the euro against the Russian ruble over the course of the last 12 months, and you can see that this time last year, 1 euro was trading for around 61 Russian rubles. Today, it's trading for more than 96 rubles. So that represents a fall in value over the course of the last year of more than 57%. And as you can see, the shape of this chart is very similar to what we just saw for the US dollar. We have seen a steady and consistent decline in the Russian ruble. And you may be asking, why is that happening? Why is the ruble falling in value? Well, there are two reasons for it. Firstly, the vast majority of European countries are no longer doing any business with Russia. They've come out and stated that they don't want to buy oil or gas or coal or any other products that Russia is selling. So that means that the demand for Russian rubles in the international markets has fallen because all of those countries are no longer needing to buy rubles. But the other factor that's affected the price of the euro against the ruble is what the Russian central bank is doing. Historically, the Russian central bank managed the exchange rate by buying in the international markets. It would step in at times when the ruble was falling in value to keep the value up. However, because the Russian central bank no longer has enough foreign currency to be able to do that, it's having to fund all of the deficits in the economy. It's left the ruble to trade on a free float basis. And what we've seen is that once it's gone to a free float, the value has fallen significantly. Now, as we saw earlier in the video, Europe has gone from being Russia's major trading partner, its number one, to being number 4 on the list, and actually we're seeing a diminishing amount of trade as more and more sanctions and embargoes are applied against Russian products. So you may be thinking that the exchange rate with the euro is irrelevant, but similar to the US dollar, the other major currency that a lot of trade deals are struck in is euros. So a lot of those deals that Russia was doing with European countries were benchmarked in euros, and other countries are also using that benchmark. So the fact that the Russian ruble has weakened significantly against the euro is still an issue for Russia because a lot of contracts are still benchmarked in euros. And similarly to the US dollar, Russia is importing a lot of goods from Europe. It's its closest trading partner in terms of proximity. And that means that the price of all of those goods that Russia's importing is rising for Russian consumers because the ruble is worth less against the euro. And that, again, should be driving inflation. But as we've just discussed, that isn't being officially reported right now. This chart shows the movement in the value of the Indian rupee against the Russian ruble over the course of the last 12 months. And what's interesting about this chart is that 12 months ago, the ruble was actually stronger than the Indian rupee. 1 ruble was worth 0.75 Indian rupee. However, over the course of the last 12 months, we have seen the situation completely reverse, and the Indian rupee is now stronger than the ruble, and 1 Indian rupee is trading for 1.09 Russian rubles, which represents a decline in the value of the Russian ruble of around 44% over the last year. Now, as we saw from the data we looked at earlier, India is now Russia's largest trading partner in terms of its exports. So the fall in the value of the ruble against the rupee is quite unexpected. You would have thought that India should be needing to buy lots of Russian rubles to pay for all of the oil that it's importing, and therefore demand for the ruble would be rising and the value should be going up. But the problem that Russia has experienced is that India doesn't want to pay in Russian rubles. It wants to pay in Indian rupees. And Russia, because it needs to do more trade and it needs those huge volumes that India is prepared to purchase, has agreed to those deals. So rather than being paid in Russian rubles, which would be beneficial to the value of the ruble, Russia is being paid in Indian rupees. And there are two problems that that's causing from Russia's perspective. Firstly, it's obviously not helping its currency. But secondly, and most importantly, Russia is building up large amounts of Indian rupees, which aren't really attractive to any other country in the world. It's not a freely traded currency. You can't use Indian rupees to pay China for your imports or to pay other countries. It's not a currency that people want. If it was US dollars or euros, you could certainly use that currency to settle your bills with other countries. But Indian rupees are only really wanted by India. So Russia is building up a large amount of Indian rupees. And unfortunately, from Russia's point of view, it's not importing large quantities of goods from India. So it's building up a huge surplus of this currency, and it doesn't really know what to do with it. So whilst on paper the huge increase in trade with India looks great, and it looks like Russia has seamlessly replaced a lot of the sales it lost to Europe with those to India, when you dig down into the details, those sales are not translating into hard cash for the Russian economy, and that again is one of the reasons why Russia is having to use its reserves to fund its deficit. This chart plots the value of the Chinese yuan against the Russian ruble over the course of the last 12 months. So you can see that 12 months ago, one Chinese yuan was trading for around 8.9 Russian rubles. Today, it's trading for around 12.3. So that represents a fall in value of the Russian ruble over the last year of around 38%. Now, as we saw earlier in the video, China is currently Russia's second largest export market for its fossil fuels. So once again, you would have expected demand for Russian rubles to be rising. China would need to buy lots of Russian rubles to settle all of these trade deals. However, as with the Indian situation, China has not agreed to settle all of its debts with Russia in Russian rubles. It's striking all of those deals in Chinese yuan. So that means that it's not having to buy Russian rubles and therefore is not driving up the value. In fact, the reverse is opposite. Because Russia is doing all of these deals in Chinese yuan, it's actually improving the value of the Chinese currency. So we've got a situation that's similar to what's happening with India. However, the big difference with this relationship is that Russia is importing lots of goods from China. It's actually a net importer when you look at the relationship. So Russia is able to use all of the Chinese yuan that it's being paid for its fossil fuels to buy all of the goods that it wants to bring into the country from China. So that's all good from a balance of trade position for Russia. However, it doesn't help the value of the Russian ruble. So what's the summary and conclusion today? Well, I wanted to post this video really to update you on what's going on with the Russian ruble. The value of the currency is continuing to crash. Over the course of the last 12 months, we've seen the ruble falling in value against the US dollar, the euro, the yuan, and the rupee. And there are a variety of factors that are driving down the value of Russia's currency. Firstly, Russia has lost a lot of trade. Its biggest trading partner historically was the European Union. However, that relationship has been decimated because of the war in Ukraine. The vast majority of European countries are no longer buying any Russian fossil fuels, and therefore the demand for Russian ruble has fallen significantly. And it's the same situation with the USA. The USA has cut all of its ties and applied massive sanctions against Russia. So as a result of those factors, it's probably not a surprise that the value of the ruble has fallen against the US dollar and the euro. But I think what is surprising is the fall against the Chinese yuan and the Indian rupee, because Russia has ramped up the amount of trade that it's doing with both of those nations. But the big problem that Russia has is that neither of those two countries want to do business in Russian rubles. They want to do trade in their own currency. And Russia, because it's desperate for new trade, because it needs to keep finding markets to sell all of that oil into that it's producing on a regular basis, it's had to agree to the terms and conditions that were put forward by India and China. And the knock-on consequence of those deals is that there is no demand for Russian ruble and the value of the ruble continues to fall. And as we discussed right at the start of this video, the value of the currency is generally linked to the strength of an economy. So the huge falls that we've seen in the ruble over the last 12 months are a reflection of what's happening with regards to Russia's trade and its economic situation. And unfortunately, from Russia's point of view, this does become a vicious circle, because as less and less countries want to use your currency, it continues to fall in value and therefore becomes less attractive to everybody. Nobody wants to deal in a currency that has a diminishing value. And it's interesting to note that at the start of the war, President Putin wanted to establish the ruble as the main competitor to the US dollar in terms of petrocurrency. It wanted to be the benchmark that everybody was looking to. However, what we've seen over the course of the last 12 months or so is that that hasn't happened. And actually, the deals that Russia are doing with China and India are helping to strengthen the Yuan and the Rupee rather than the ruble. So the overall summary of today's video is that over the course of the last 12 months, we've seen a significant decline in the Russian ruble, which is directly linked to the decline that we're seeing in the Russian economy. So I'll keep you posted as soon as there's any more news on this and related stories. Hopefully you found today's video useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end. And here's something to put a smile on your face.